What would you do with $175,000 in your pocket? Did you know that the San Jose housing market is up 15% year over year? Is it time for you to liquidate your equity and make a move? Which direction is the market headed? Well, stay tuned so we look at real data so you can make informed decisions. Hi, I'm Theresa Wellman with HomeownerExperience.com, your local San Jose, California realtor. And today we're jumping into the San Jose market update, talking about August 2020 closed data and which direction the market is trending. We will review inventory, sales prices, and the number of sales to make a prediction of what's coming up next. Is now a good time to buy or sell? What does the market data say? I want to help you make informed decisions, so let's look at the real data and jump into the computer to talk about the actual stats and the trend charts. Okay, here is the real estate dashboard for the San Jose single family market as of September 2020. We're looking at August closed data. So the August prices were up 4.8% on average. Now that's pretty good. That's up from July. And we're up 15% year over year. Very near to our 2018 peak prices, if you believe it or not. It's pretty big news. And now August closed sales were actually down from July, about 12.6%. And they're also slightly less than August 2019 by 10%. But year to date, there's 8 months, which is 8 months of sales, right? We're down 14% in 2020 from 2019. And I'm sure that a lot has to do with the coronavirus impact and the really big, huge decrease of sales that we saw in March and April. So are we hitting the peak of the summer market? Well, let's look a little further into this chart and the data. So here you see the prices as I noted them. Prices have kind of been up and down, sort of stabilizing, with the average price of 1,334 in August. And if you go look back at the peak of 2018, we were actually at 1,366. So that's why I say my comment of we're really close to that. And you can see right before the impact of coronavirus, the average price closed in March was 1,364. So it was pretty much right at that peak, and then things slowed down. As you can see, the green lines are the number of sales. They took a big hit, of course, in April and May, because those are sales that went pending 30 days before that in March and April. And then our market recovered to kind of what we would consider fairly normal. So if you look at this yellow bar, this is looking at the last 3 months of June, July, and August. And I'm comparing 2019 to this year. As you can see, in 2019, it was pretty flat. This year, we definitely had a little peak, but of course, we were recovering some of that sales that didn't happen here in April and May. So I think overall, the market is looking pretty good. I think the biggest contrast that you will see here, of course, is the inventory is extremely low again. In 2019, we peaked at 678 homes on the market. In 2017, the peak was really early and only 422. And here we are today, right around those numbers that we saw in 2017. So really, really significant, especially if you look historically prior to this 2012, there's very low inventory. So here I talked about that and mentioned it on the graph. We're down 43% year over year on the inventory. And we only have 29 days of inventory, which is really awesome, meaning we are in a strong seller's market today. The pending sales are up 5.6%, while the inventory is up 8% as well, we mentioned before, but that's not very huge. And houses on average are selling 3% over asking, and that's on average. So I'm sure there are plenty of samples of houses selling much more than that. Obviously, the market needs inventory because buyers are bidding and paying over to get a house in this area. So the pending sales, interestingly enough, are up again. We're 5.6% higher than July. And typically August, we're going to see a change in the pending sales and slightly go down for the fall. But we're not seeing that right now. I do think that's because we have a delayed spring market due to coronavirus. But we're also up 40% year over year for August. That's significant, more than maybe just a little delay. I don't know. So the peak pending sales, I went back and looked at the history because that was such big numbers to me. I was curious. We just in August had 524 pending sales for San Jose. And if I look all the way back in the history, the next time I saw anything close to that was in May and June of 2017. So over 3 years ago, did we have that kind of numbers. So we have really healthy sales. Buyers are obviously jumping into the market, and we have 57% of the homes available for sale are actually in contract. So that's pretty significant. Now, this might explain a little bit about why pending sales are popping up, or this definitely correlates with it, if I put it that way. This is the number of purchase or home loan applications that have been submitted. And so we've been up 15 straight weeks in a row of year-over-year increases, meaning more applications 2020 than 2019. And obviously that slowed down when coronavirus hits. You see here in mid-March all the way through the beginning of May, then it started to really heat up. And that obviously is shown in our pending sales. We've got more buyers who've been approved and are jumping in, possibly because of these low interest rates. Now look at this. This is a 3-year chart of interest rates from Freddie Mac. And you can see the interest rates kind of peaked here in late 2018 and then have been dropping, plateaued a little bit, continue to drop. We are on average for a 30-year fix, 2.86%. That is hugely significant, extremely low. And obviously that's part of the reason we're motivating buyers to jump in the market, and we are seeing an increase in our pending sales. So this is a chart I like to discuss and go over every month. It is an interesting chart of the average prices in Santa Clara County versus the S&P 500 stock market indices. And as you can tell, there was a lot of fear when the stock market dropped that the housing market was going to drop. And if you've been watching my videos, I did explain I didn't think that was going to happen, because actually we had been in disagreement, and there's only been 5 times in history where these two lines didn't really track each other. So what happened with the coronavirus decrease? Obviously the S&P 500 recovered, but the housing market was not greatly affected. There was a slight dip in there because of the drop in prices, but then it has recovered along with the S&P 500. So all great news. And unemployment continues to drop. Also great news. We are getting back to a little bit more people employed, and I think we're seeing the pending sales jump up with that too. So overall, let's talk about the direction of the market. Well, prices are up and houses are selling over asking. The closed sales did dip a little bit, but the pending is really high, really heating up again. What's going on? I don't know. It'll be interesting to see, but I do expect a pretty hop in early spring based on those pending sale increases. And inventory is slightly up, but still at record lows. So that is continuing to fuel overbidding and good prices. And it is definitely a seller's market with only 21 days of inventory. So will the presidential election coming up have an influence on the market?
Watch my video about what happens in the local market during an election year next. Or if you'd like to know more about whether it's a buyer or seller's market and what that really means, check out my video on that.